What's happening, YouTube? Corey Smith here with CoreFX, bringing you another pre-week market analysis video here through T3 Live and their YouTube account. I hope some of you guys are new viewers returning, coming to check this out, and some of you guys might be returning viewers. But either way, I thank you very much for your support, taking the time to watch these videos. I hope you guys enjoy T3's page. They got a lot of awesome content on here. Make sure you subscribe if you are a new viewer. Basically what these videos are is I go through a breakdown of the foreign currency markets, the FX, Forex markets, and I take a look at last week, what happened fundamentally, what's going on technically on each of the index for the major currencies, technical charts, what they're looking like, the top performing, underperforming currencies of last week, and then I go ahead and look into the week ahead and go over what events are going on, what's to be watched for, and basically just a breakdown of all the different fundamental events and how they can affect the Forex markets. So it's a load of information. It's pretty much everything you need to get started for the week ahead, aside from your own technical analysis of the charts. And it's going to be a about a half hour long, going in depth into everything I just said. So what I'll do is go ahead here and start with the currency performances. I'll go over the top performing and underperforming for last week. Then I'll jump into the technical charts for each pair individually. Then I will switch over to the news events last week, what was going on, what major events happened, and then we'll go into what to look for this week. All right, so starting with last week's top performing and underperforming, as you can see on this chart, this gives us the 1 week relative breakdown, and this is compared to the US dollar. So the dollar is the base currency that this basket's compared to, and it shows us how each one performed versus the dollar. This is going to be our best indication of how each individual each individual currency is performing. So you had the yen outperforming every other currency with a 2.35% increase in value. Now, this is amidst a rally in the equity markets. The U.S. stocks basically almost fully regained the losses from last week in a pretty bullish week we had this week. And typically when that happens, the yen is weak because the yen is a risk-off currency, and typically when there are risk-off moves in the environment, people are investing in higher risk assets. They are taking their money out of safer, less risk assets, more risk-averse, like the Japanese yen. So typically the yen falls in value because there is no longer as strong of a demand. More of the demand is going into higher yielding, higher risk assets like the U.S. equities or any nation's equities, but like the stock markets. So the opposite happened this week. So the Japanese yen was the top performer by a long shot in a time of risk on. So, I mean risk off. So this is telling us that the Japanese yen is pretty much ignoring the fundamentals and pushing higher. We did, when I'll get to the chart in a minute here, we did have a very strong break out of the last year's range it's been trading in. Very strong resistance. So technically this could be driven. However, the fundamentals in Japan are starting to pick up for the first time in about a decade or so, and the Japanese yen is just starting to appreciate regardless of what's going on out there. Fundamentals are saying it should be weak and it's strong. So that tells us that if it's shrugging off things that should be pulling it down, that we want to be long the yen. So quick little side rant there on that. But then you can see New Zealand dollar was one of the top performing, pound was one of the top performing. Then we had the Euro, Swiss franc, Aussie, and CAD all outperforming the dollar. The US dollar getting crushed was the story of the week again. Again, it was the weakest. We've been seeing this for a while now. The dollar's just been getting crushed. This downtrend continues. Dollar actually had some very strong CPI readings this week, and it's still getting crushed. So we're looking at the exact opposite story as I just went over with the yen. The dollar's getting bullish news, and price actions continuing bearish. This is basically just suggesting that the overall downtrend of the dollar is stronger than these events and this news coming out. There's a rate hike going on with the Fed, and the chances of the interest rates going up faster and higher than expected are increasing. However, the dollar is still decreasing, showing this overall downtrend of the dollar. There's just nothing stopping it right now. No good news can pull it out of this downtrend. So this is something that we are going to keep an eye on, shorting the dollar. Long the yen, that seems like a good setup right now. So I'll go ahead and get into the charts here, and we'll take a look at some of these technical setups and what we're seeing for this week. So starting with the US dollar, like I said, we have been in a downtrend since around the beginning of last year. So we saw a very strong dollar in 2016, Donald Trump became president, we saw a very strong rally in the dollar, and then talks of wanting a weak dollar to boost U.S. production, manufacturing, and all, making us more competitive internationally with a weaker dollar, set us into a downtrend, and now we've really just been continuing this jet downtrend with very little corrections. And now we've come back down. We set a low down here at 88.50, bounced off the low, retested structure at this broken support turn resistance now, and we've fallen back down to this low. However, what I'm seeing off of this low is some divergence here on the daily chart. We are on a very strong weekly support, very strong weekly level. If you look left all the way back to at least 2009 here, we're seeing it being respected. It's also a nice strong demand zone from this breakout higher. The weekly did close a bearish engulfing, which is a bearish sign for us, and this isn't a downtrend, so I'm still bearish the dollar. However, I got to be watching both sides because in trading anything can happen. And what we're seeing is divergence off this weekly support, the potential to be a double bottom forming here. If this was a double bottom, we've got a neckline of the double bottom formation here. We have a bullish engulfing off of this support that price failed to move lower under, and we did see a bounce on Friday. So we'll have to wait and see what the dollar does here. I don't particularly trade counter trend, but if you look here, if you were that type of trader, there is a decent risk to reward setup here with a small stop down there and potential move. If this double bottom takes place, a potential move up to around this area here. So not a bet I would like to take, but just like to be open to both ends of the equation and what could happen. And this is soundless mixed signals, so we'll have to see what the dollar's direction does here this week to get started. But definitely some interesting setups technically out of the US dollar. Taking us to the euro, we know that these pairs basically make up 60% of the transactions in Forex is the euro dollar. So the dollar and the euros index are going to look exactly opposite of each other basically, because the main movers of this is the euro dollar paired against each other. So obviously the euro is going to look the opposite of the dollar. As you see with the euro chart here, we actually had a bit of a triple top, 1, 2, 3. That could be the same type of reversal that I was showing you on the dollar. It's on a very strong weekly resistance level. If I back this out, you can see this is a supply zone we created right here that price tapped. And if you look left, you can see this is a very strong zone in the past. So we have hit a strong zone. We did get some rejection on the weekly after the initial touch. Now we've come back up to retest it, and you can see we've got a little bit of rejection here on the weekly. Not quite a bullish engulfing. Dropping back to the daily, you can see this triple top we've got here off this resistance. So again, we'll have to wait and see here. This could continue to fall, and then the support would be this 118 level here. We'll see if this can hold. If this breaks, then we will have a break of structure. This is the higher low that we set. So if price is failing to break the higher high, retest it coming, now it could retest the lower high and the higher low, I mean, and we could just continue in this range. Or if we break lower, we got a lower low set, countering that trend. If we go higher, we set a higher high, continuing the trend. So another pair we'll just have to watch and see where we go. Japanese yen, this is the chart that really catches my eye as far as the indexes go. So as you guys can see, and as I've talked about multiple times here in the past, we've been in this trading range with the yen for all of 2017. Every time it gets up to this resistance at around 89, it sells off, comes back down to around 84, 83.50, comes back up, sells back off, comes back up, sells back off, came back up here, and then this week, Friday, Thursday, Wednesday, Tuesday, Monday, we opened here, price exploded higher and didn't look back. So we've broken now up above this range. If you see on the weekly, you can see much cleaner break and close above this resistance. So this is a beautiful technical setup for bullishness out of the yen for us. I will be expecting continuation to the upside. I would like to see a little bit of a pullback and then continue higher. Whether this week is the pullback or whether we get a little bit of a pullback then it continues, or if the yen just sells back off into this zone and we have a reversal, we ought to be open to any outcome. But probability and odds tell us that the uptrend is more likely to continue than anything else. So we'll be looking for dips, buying the dips within the yen, looking for these pullbacks to enter good risk to reward scenarios to go long on the yen. British pound bounced higher as I called last week. We came down and set this lower high within this nice uptrend, and I told you we were likely to bounce off this lower high and continue higher, and that's pretty much exactly what it did with this big bullish engulfing Wednesday off of the CPI numbers we got out of the UK. It's now nearing again back up to this higher high up here that we set at around 139, which is a weekly resistance. You guys can see here all the way left, this is a very strong zone that it's been respected in the past. You guys could see this weekly rejection we first had with the shooting star, sold off, and now we didn't quite get a bullish engulfing here either, but now we are bullish again last week. The daily shows it's bullish as well, so we could see this continue back up to retest 139, and from there we'll have to see what it does. Or if we roll over and break 134, that would be a trend changing lower low break of structure. We'll be looking for shorts if that happens, but for now we are looking long. I'm not looking for anything in particular out of this chart, except for a potential move for the pound back up to 139. Canadian dollar, on the weekly we had it bounce off of this downward trend line that we can see here, and on the daily you can see that we talked about last week this break of structure. We had this uptrend, then this came down and set a lower low, breaking our structure to the left here. Set a lower low, we rallied this past week, set a lower high. We could be making another leg lower now off of this move back up to set a lower high. We could come back down here to 76.50 support down here. This isn't the prettiest chart technically. It's kind of choppy, rough, not very good trends. We have a downtrend, then it based, then it went back up to an uptrend. Now it quickly reversed down to another downtrend we're setting. So really nothing pretty going on with the CAD, but all in all, if we were to pick a direction, it would be to the downside. We are setting structural lower lows, lower highs. So I would like to see another lower low set before I really am convinced this is going to be moving lower. But what it tells us right now is that downside is typically potentially the better outcome. Swiss franc. The franc had on the weekly chart here, we had a nice break and retest of this 200 SMA. As you guys know, 200 SMA is, or maybe some of you don't know, but the 200 simple moving average is a strong dynamic support and resistance. So it often has a reaction when price hits it and acts as support and resistance. And you can see here it broke through no problem, came back to retest, and then bullish engulfing off of it. So we definitely are still bullish the Swiss franc. Taking to the dollar chart, you can see we set this higher high, pulled back for this higher low. Now we set a new higher high, and it's pulling back again a little bit overextended with price, a little bit of choppy, not too clean of price action, but we are definitely in an uptrend. Definitely looking for longs more so than anything. So we'll have to keep an eye on this pair as well. But I do like it to the upside. Australian dollar, taking it to the weekly chart, we have an uptrend. We're trading above all three moving averages. 20 is above the 50. The 200 is above them both, but its price is traded above it now. And you can see after this last bullish move it made, setting a higher high, we've now pulled back to set a higher low right at the 50% Fibonacci. It also pulled back to bounce off this 200 SMA. So the weekly is telling us we have a new formed uptrend. Nothing too crazy. This isn't the best price action. Well, really, if you look at it from the bigger picture point of view, we have been in an upward trend channel on the weekly since early 2016, or since about mid 2016. So we definitely look bullish on the weekly chart, and you can see this pull back to the 50% fib, which is a nice area to continue in trending moves. On the daily chart, you can see we've had some really wild movement. We had this strong push higher, pulled back to almost the 618, bounced, but if you look at it from this point of view, we set this trend changing lower low here, bounced up to the 50 SMA. Could be, the 50% Fibonacci could be moving lower. So this is again sending us all kinds of mixed signals. From the weekly point of view, we have this nice bullish daily bounce off support here, which tells us this is a very strong bullish momentum. But at the same time, we have a trend changing lower low, lower high set here. Prices below the 20 SMA, which is also sloping lower. So a mixed basket here with the Aussie. Nothing too crazy to look at, but still be keeping an eye on it. New Zealand, as I've been showing you guys, we've been in this uptrend. Underneath of this 75 strong resistance level, the weekly came up and hit the resistance, sold off, and now we had last week's bullish engulfing candle of the weekly off that pullback. So we had a nice set of higher high made, higher low, now push back up, and we're back up to retest this higher high. We did have Friday close as a gravestone doji, so it is a bearish reversal candle. However, we're in an uptrend. It is off resistance, and it could see a little bit of retracement, but I think the upside is what I'll be looking at for the New Zealand dollar more so than anything. So we'll have to keep an eye on it, but that is where I will be looking for the New Zealand dollar to do the start of the week. Now, I just want to switch over here to the S&P 500 real quick, and switching it to a weekly chart. You guys can see the past 2 weeks we had this very strong sell-off. Very strong correction, correction we haven't seen in the markets in some time. But this past week, we did have this bullish bounce to recover much of these losses from last week. The week before, I'm sorry. So the 2 weeks ago, this strong bearish move lower. We then opened last week higher and was able to push back, recovering almost all of that weekly loss. So good sign for the continuation of this uptrend. What it could be saying is this lower low that we set could be trend changing, and now it rallied back up to the 618, and this is going to go down to set a lower low. I think fundamentals are strong enough in the US that this bull market's not done yet. I think that we still have another year or so left in this bull market, so I don't think this is going to just rip higher and completely continue this blasting higher move, but I think we will slowly continue to move this higher and eventually in the next few months break this resistance again and continue the uptrend into new territory. But we'll have to wait and see how this reacts, and this, is related to the Forex market, so it's something we'll be watching and I'll be analyzing every week for you guys. So that takes us on to the news. Here with ForexFactory.com, this is my favorite go-to for news as far as the FX markets go. Starting last Sunday, we didn't have anything going on, as I showed you guys. Sundays are typically uneventful, and not many markets are open. Only the Asian markets, Asia Pacific, is open Sunday night. So that is, of course, I'm in Eastern Standard Time in the U.S., so that is why Sunday night is, to me, what is actually early morning over on the Asian side of the world. But London opens as well on Sunday night, U.S. time, but again, not too much going on. It's Monday. It's Monday in those countries, Sunday in the U.S., and typically there's not much volatility, not much movement, not much liquidity going on. Taking us into Monday last week, we had another not very eventful day, but we had the business confidence report out of Australia, and it jumped by 6 points to a plus 19 rating, which is very strong reading. And although these surveys change month to month, we are seeing a steady trend to the upside in these readings, which confirms the growth in Australia and the confidence people have in the economy. So this is a good sign for Australia. Certainly what they want to see if they're going to get back into rate hiking and have their economy grow to the extent of Europe and the US at the moment. So this is a good sign for Australia as far as confidence levels go. And as we know, confidence levels have a direct impact on the actual activity in the environment, because when people and businesses are more confident in the environment, they are more likely to spend and grow and invest. And this is all things that stimulate the economies and then lead to a growing economy. So we do want to see these confidence levels higher, and that is the importance of why they offer them and read them. Then we had on Tuesday the British pound CPI reading actually beat expectations at 3.0%. The pound was mixed at first, but it did end up being stronger all week. The Bank of England may be forced to rate hikes sooner than expected, as we know, due to their inflation remaining well above the 2% target. The Bank of England, we knew this after their meeting, And this reading basically just shows that the CPI is continuing to increase, inflation is continuing to strengthen, and this is a very hawkish sign for the pound, as the Bank of England is more likely to have to act on increasing rates sooner rather than later. After that, we had New Zealand's quarterly inflation expectations report, basically just consumer surveys on their outlook of what the inflation is going to be like in 2 years and 1 year. And their inflation outlook for the 2-year time period actually did rise from 2.02% to 2.11% compared to the last quarter's reading. So the 1-year outlook did slightly tick lower from 1.87 to 1.86, but that is a very insignificant move. Consumer expectation usually has, like I was just saying in Australia, a self-fulfilling prophecy. So this is a good sign for the bullishness of the New Zealand dollar, as it is showing there is a potential for inflation to be at and above targets within 2 years, which is and an uptick to the reading, which is definitely bullish for New Zealand. Then taking us into Wednesday, we had the flash GDP out of Europe, which I told you guys was the second GDP reading, not very significant. It met expectations, so nothing going on there. After that, we had the US dollar CPI, one of the biggest reports of the week. And as you can see here, the dollar beat the core CPI, which is the consumer price index minus food and energy, and it also beat regular CPI containing everything. So very strong inflation data reading, which, as we know, the U.S. Federal Reserve is very data dependent, and they are watching these readings. And if we get a pickup in inflation, they are going to be forced to adjust rates faster. The market's pretty much pricing in 2 rate hikes this year, but now the third is more and more likely to be possible. So this is showing us very hawkish data out of the U.S. as far as the Federal Reserve and hiking rates goes. However, we are continuing to see the U.S. dollar moving lower, even with strong data like this, which shows us the overall picture is that the U.S. dollar is in a downtrend, even in a rate hike cycle, and strong news can't change that. Nothing's changing that. So this is definitely something to watch. U.S. dollar continued lower, and we'll continue looking to short the dollar off of rallies, as there's nothing that can pull the dollar out of this downtrend. Retail sales, however, did unexpectedly fall. This shows that there was a slowdown in consumer spending. Auto sales fell the most since August, dropping 1.3%. There's been an increase in household debt and consumer debt, so this could be causing consumers to spend less and save more to get rid of some of this debt. So that could be why these retail sales numbers moved lower. However, all in all, this is definitely something to keep an eye on to see if this turns into a trending thing where consumers continue to spend less money, because that's 2/3 of the economic activity. So that is definitely very impactful. After that, we had the Australian dollars unemployment report. They created 16,000 jobs last month versus 15,300 jobs that was expected. Unemployment rate remains steady at 5.5%. Basically, it's showing us job creation remains on the uptrend, which is a good sign for the job market in Australia. Unemployment remains consistent, so Australian dollar was choppy off of the announcement and not too much direction either way. But all in all, this is showing good numbers out of Australia, and that the job market's stable and the economic activity is continuing to look good. Moving into Thursday, we had producer price index. This is the inflation readings out of the production side of the economy. So the consumer price index is weighing in the inflation numbers for the goods that consumers buy directly. So the end user price for gas and food and diapers and everything else that we buy. And then producer price index is going to be the change in value of goods the producers buy, of the raw materials and such, to make the goods that are sold in this country. So PPI was as expected, but however, the core PPI, which is excluding food and energy, upticked from 0.2% to 0.4%, showing basically that inflation is picking up consistently from the consumer to the producer side of the economy. So even more of a reason that the Fed will be looking to raise rates. Later on Thursday, we had New Zealand dollars manufacturing index. Basically, it's a survey showing the ongoing status of the manufacturing industry and how businesses feel about it and all. And the survey basically has showed, even though the manufacturing numbers have been up, the survey showed ongoing caution. Basically, since the new labor-led government took over in New Zealand, there has been some unease with the future, and people have been a little skeptical and hesitant. So the reading continues in an uptrend since October 2012. So we're at 6 years worth of an uptrend still, but the data did soften as opposed to 2017 prior to the new government takeover. So there is some hesitation and some skepticism from New Zealand until this government can flatten things out. That takes us into Friday. We had the pound's retail sales missed expectations. So in the UK and in the US, there's been reduction in consumer spending. So we have to see if this remains happening in other developed nations, and if this continues to happen in these nations, and if it's something that could become more of a global concern if people start worrying more that this bull market's coming to an end. We'll have to wait and see. This data could just be cyclical, and it could just, next reading, pick back up and shrug it off, and it's just a typical pullback as usual. But definitely something to keep an eye on if this trend continues, and if this turns into something more so than we anticipate. All right, so that pretty much covers everything last week. As I said, the U.S. equity markets rallied last week, regaining almost all of the prior week's losses. Volatility's picked up, which as traders, we do like volatility. So there should continue to be great opportunities in the markets. Taking us into this week, it is now Sunday the 18th of February 2018. And taking us into this week, Sunday we have nothing as usual. Monday we have Bank of England's Governor Carney speaking about leadership and values in London. Not too important of a talk. However, the audience is expected to ask questions. So it's definitely important to be aware of this event if you're in any pound trades. And some of these questions most likely will be aimed at monetary policy, inflation, and the economy. So something to watch for. After that, on Monday, we have the monetary policy meeting minutes out of Australia. Basically, this is a report issued 2 weeks after their rate decision, their central bank meeting, 8 times a year. And they go over a detailed breakdown of the last decision, why they made it, and the economic outlook. And there is definitely expected volatility around this. Nothing too crazy, but a little bit of movement expected. Nothing real important going on Tuesday. Moving us into Wednesday, we have out of Europe the PMI numbers. This is the Purchasing Managers Index. Basically, it is a survey of purchasing managers to get an idea of what their outlook is on the business climate and the conditions of the economy for running their businesses. This is a forward-looking indicator. It tells us basically if these guys or gals, these purchasing managers see potential good growth and good stable business climate, they're likely to expand and increase production and do all these pro-growth actions. If these numbers are lower and they're not very optimistic on the business climate and they're worried about things, then this could lead to them retracting and declining and not looking to grow as much, maybe cutting workers, cutting back, closing some facilities, whatever. So this is definitely something to keep an eye on. It's issued out of France, Germany, and Europe. France and Germany are two of the biggest economies over there, so these numbers usually have an impact on the euro. Then we have big news out of the pound on Wednesday. Their average earnings index, which is the jobs report out of England, gives us the wage growth number, what wages have grown by. Also gives us the claimant count change, which is the collecting the unemployed. And then we have the unemployment rate. And really, it's a big event to watch for. Typically has some strong moves in the pound. The wage growth will be watched pretty closely, and also the claimant count change. After that, we have the inflation report hearings out of the pound, which is the Bank of England and the Monetary Policy Committee members testifying to the Parliament's Treasury Committee in regards to inflation and economic outlook. So this could be something to watch and gives us an idea of how the Bank of England and their monetary stance is for the future moving forward. So this is definitely something we want to be watching, especially with the uptick in CPI and the potential for the Bank of England having to hike rates sooner than expected. Then we have on Wednesday afternoon at 2 p.m. out of the U.S. the FOMC meeting minutes, which is the same as the RBA, the Monetary Policy meeting minutes out of Australia. It's issued 3 weeks, though, after the rate statement and gives us a detailed report of the last meeting and an in-depth look into what influenced their rate decision. So, again, this is something that could have some impact on the US dollar once we get a little more light into that meeting and how it went and why they did what they did. That takes us to Thursday. We have the second GDP out of Great Britain. It's the middle of 3 reports, so it's typically not very eventful, as the first report is basically the main reading and what is the unexpected first initial report. This one's just an adjustment of that, so it's not very important, but it's still a GDP reading. It still could cause some strong movements if the number is adjusted upward or downward. So it's definitely something to watch for. Then we have the ECB's monetary policy meeting accounts. Another one of the same things. It is 4 weeks after their rate statement, and basically just a detailed record of why they did what they did. So something to keep an eye on here as well. Then we have retail sales out of Canada on Thursday. Bank of Canada, we know, is very data dependent currently. They had a huge jobs report miss earlier in the month. So we're looking to see if this trend is to continue and this bad data is going to continue out of Canada, or if it shrugs it off, consumers continued spending last month, and we continue back into the bullishness coming out of Canada. This is definitely something to watch, as the Bank of Canada is going to be watching it and traders will be reacting to it. Then we have retail sales out of New Zealand. It's their quarterly report. A lot of nations issue monthly reports, but New Zealand does quarterly. Gauges the spending by consumers, again, which I told you guys is 2/3 of the economic activity in a nation. Inflation expectations in New Zealand picked up last week, which could be reflected in this report with more consumers spending their money as they feel inflation will be picking up. So this is something to keep an eye on, and typically has a 30-40 pip move or so in New Zealand dollar. So good opportunity to trade around. Taking us into Friday, we have the final CPI out of Europe. This is not a very impactful event, as the flash CPI, which is the first reading, was released 2 weeks earlier. So this is, again, just simply a finalized reading of that CPI after they adjust and look further into the numbers and clear things up. Then out of CAD, we have the CPI. This is most likely going to be the biggest mover of the week, and it is for the Canadian dollar. Fridays for the Canadian dollar are typically very strong trading days with CPI, GDP, and your employment reports. This is a very important reading, and as I just said earlier, the Bank of Canada is very data dependent. They are in a rate hike cycle since 2017. They remain extremely dependent on these numbers, and CPI is the strongest inflation reading, and inflation is one of the strongest data points the central banks base their decisions off of. So the most important aspect of this data for central banks is this CPI report. Their last jobs report missed horribly, and a miss here to this CPI and a decrease in inflation could show us a very bearish move out of the Canadian dollar. So this is definitely something to watch. However, a beat of this report could cause a very strong Canadian dollar to shrug off that missed jobs report and continue moving. So definitely something very important to be watching. And then we have, to end the week, 3 different Federal Open Market Committee, U.S. Fed members participating in a panel discussion about the Fed's balance sheet. This is basically the assets versus liabilities, like companies have balance sheets, but for the U.S. Federal Reserve. So it shows whether they're spending money, making money, all this. And this will be done at the U.S. Monetary Policy Forum. So we could cause some U.S. dollar movement on what's typically a slow Friday afternoon, but nothing real crazy. I typically won't be trading around this because it's Friday afternoon. I'll just manage some trades to the end of the week, but not much volatility going on Friday afternoon. However, Friday morning, we could expect to see some strong moves. All right, so that pretty much does it for this week's recap, guys. I hope you enjoy these videos. Check out T3's other content. They have some great stuff on here on YouTube, T3 Live. Check me out as well, Corey Smith. I am CoreFX, foreign currency trading company. My website's corefxtrading.com. Check it out, see what you think. If you have any suggestions about these videos, let me know. Leave a comment, drop an email. Check out my site, leave me some feedback. I really do appreciate you guys taking the time to watch these videos, though. I hope you get something out of it. I hope you get some value out of it. And I will see you guys next weekend. Have a great trading week.